Oh, there's that music. Welcome to Big Boy Crypto, where we like to empower you to have financial freedom through digital assets. If that's something you would like, go ahead and hit that smash that like button. Hit that like. Also, go in the description, check out, we got all the links for the guests that we have on the channel today. You can check out, go to their channel. Some of them have some great websites. We're going to get right into it. This is Around the Blockchain. We come to you Monday through Friday at 5 p.m. Eastern Standard Time. We talk crypto with your favorite guests. Today's no exception. We're going to start right up here on the top right side. We have Mac and Cheesy, and I always recommend you got to go check out his incubator. Check out his little website, and he's pretty fire TikTok too. Also in that bottom right, we have Gareth Soloway. We had him misspelled as Gareth, but no, he's Gareth. He's in the money stocks. He'll show you how to make some really good trades, if or show you what to look out for. Again, do your own research. Also in that bottom left, we have Crypto Keeper. I do always say check out his channel, but dude, you did a really good interview with Altcoin Daily about 3 days ago. Yeah, both of them on there.
Thank you.
It's not often you see both on camera at the same time, even on their own channel. So if you like to see them on at the same time, we don't have them on at the same time on our channel. So you got to go to Debate Crypto. You have to check out his channel for that. And all the way up north, and I believe, where are you at? Ohio right now. We have Ben Armstrong. There he goes. Ben, where are you at right now? Indiana. And Indiana. There's just no planes for you to come down back into Georgia. But
Yeah.
I know you're avoiding the helicopters, of course.
Yeah, no helicopters. If it's not good enough for Kobe, it's not good enough for me.
And too soon. And you will be back hosting.
No, I'm being serious. I'm being serious. I mean, think about it. If a helicopter could take out Kobe Bryant, then we're all susceptible. That was a respectful comment. Was not
yeah, no, not at all. And if anything, just kind of saying,
Kobe's the guy.
Sure he had the top of the line, I'm sure. Maybe still saw what happened. But yeah, we're going to talk about some digital yuan Olympic debut, some Bitcoin price action today, and some generational wealth. How can you make it? How can we set ourselves up? How can we set our families up? How do we set our kids up? So we're going to be covering all that. But before we get into that, you know what time it is. It's time for the Market Watch. Yes, that's right. That black and white plane. That's not the one Ben's on. All right, let's see. Bitcoin right now at 42,700. I never thought I would feel bullish as I feel right now at 42,700. We have Bitcoin up about 2%. Ethereum, still kind of like I mentioned this morning, fighting around with that $3,200 support range. We have BNB up 10%, Cardano up almost 5%, XRP almost 5%, Polkadot up almost 10%, Matic over 10% right there. So we're seeing some really good moves, and Near Protocol up 20%. But I want to talk, we're going to talk about Bitcoin in the middle, so I want to talk about Ethereum real quick. Now, Gareth, I know, Ethereum is kind of playing out with some similar patterns that we're seeing with Bitcoin. I know with Bitcoin, we had a pretty textbook head and shoulders graph. Now, Ethereum's had a little bit different kind of run for these past 6 months, 12 months. Are we seeing a similar head and shoulders pattern on Ethereum, or is that just not quite line up?
As of now, we can take a look at the chart, but as of now, it doesn't appear to be that just yet. Now, it could form, right? So here you would have the shoulder, the left shoulder, the head here. We just haven't made a right shoulder. So we can't assume yet that that's what's going to happen, but it certainly does seem to be lagging Bitcoin's move by whether it's a couple months or so from the top on Bitcoin to where it is currently now. So it could form, absolutely. I would keep an eye on this trend line right here now and see if that shoulder forms to the right of it. But yeah, definitely something to keep an eye on.
All right, so maybe not just textbook shoulder coming out, but we got a little bit of Michael Jackson Thriller action. Maybe we're seeing a little bit of a shoulder twitch there. So I'm eternally optimistic. So you know how I'm going to be leaning on that. But let's get into our first topic here. China rolling out the digital yuan for the Winter Olympics. So we got the Winter Olympics. It's going to be in Beijing, and they're going to enable the foreign athletes and ambassadors and the spectators to use their digital currency for the first time. This is probably the most broad rollout we've seen, unless maybe you count like the island of Tonga or something. But as far as mass adoption, this is a huge rollout. A lot of hardware, a lot of software, a lot of never before seen tech. There will be, an encouraged use of the digital yuan. They're not forcing everybody to use it. Other payments are going to be available as well. So I would consider, before we get into the nuts and bolts of this, Ben, I want to bring this to you. Do you see the digital currency battle that me and we know this is going to happen. It's going to be a battle between the USDC or DT or DP or whatever it might be and the digital yuan. Would you consider this the new Cold War, if you will?
No, because I mean, China can force. It's much different because China can force their people to use whatever they want to use. I mean, really, what we're seeing here is we are seeing the dawn of a new era of CBDCs that will be used across the world. China is rolling theirs out like pretty quick here, obviously, but I do think that over it's going to be a lot longer before we're using them in other parts of the world. Our digital dollar, it's going to be a long time. I really believe that. I think it's going to pretty much in the next 2 to 3 years, it's going to kind of debut. The idea is going to debut, but it's probably going to be a good 5 years before that's ready for use in the United States. But crypto, like open source crypto, the crypto market as we know, Bitcoin, it's not winning the payments battle. The payments battle is going to be won by CBDCs. They're already in control of all the money. The central banks are already in control of all the money. So whatever they want to do and whatever they want to put forward is how it's going to be in the short term. When we're looking at Bitcoin maybe being the world reserve currency, we're looking at a much further off date range. We're looking at, in my opinion, 20 to 50 years, probably closer to 50 than 20 even. We were going to have a big on these CBDCs are the go-to payment. They're going to be fast, they're going to be easy, and they're going to be tracked. And that's what the government wants. That's what we're going to use.
All right, you bring up a couple good points there. I want to stick with this. It's going to be fast. It's going to be cheap. They, like you said in the beginning, they essentially force their citizens to comply. Like this is forced adoption. This isn't anything kind of natural that we're seeing. Crypto Keeper, I want to ask you a question on this real quick. With them able to force their citizens to adopt, do you see the rise in a totalitarian style government? Do you see the rise being quicker there in those style countries? Or will the freedom of the market beat out that? And then, you'll see it in more of a more free and more democratized government. What do you see winning there? The authoritarianism or like the democratic process?
Unfortunately, I see the authoritarian side of things winning out there. And I'll tell you, I actually want to quote, there's a Cornell economist, his name's Eswar Prasad. I hope I didn't butcher his name. But he has a book called The Future of Money, How the Digital Revolution is Transforming Currencies and Finance. And he says in there, digital central bank money is only as strong and credible as the institution that issues it. More importantly, in authoritarian societies, central bank money in digital form could become an additional instrument of government control over citizens rather than just a convenient, safe, and stable medium of exchange. So for me, I don't think it gets any more clear than that. I think that ultimately, this is part of what kind of scares me as it relates to the United States with CBDCs, because I think it will get introduced as a really convenient in an unassuming way. And it presents like it's going to solve these multiple different problems that we have that'll be convenient. And then I think that it's going to, on the back end, things aren't always right as they appear. And I think that our economy, not just in the States, but also worldwide, is struggling at best right now, right? So there's an idea brought forward by Hegel that basically it's called the Hegelian, and it's essentially that they bring forward a problem and then bring forward those same people or same entity bring forward the solution to the problem. So I don't know. I see a lot of great things that can be achieved as part of digital currency moving forward, but I think that it's a tightrope walk as to whether it gets used for good or for bad, because there's a lot of privacy issues that are going to be coming along with it, as far as that goes too.
Yeah, definitely some privacy issues. Really good points there. I mean, we have seen it in America in our past as well, but definitely some privacy issues. I was looking at some of the hardware that they're rolling out. They're going to have physical cards with the crypto on it. They're going to have exchange machines. Think of kind of like a Bitcoin ATM. They're also going to have wristbands that you just swipe your wristband, and next thing you know, it's deducting from your digital currency account. So we're seeing, all these things I'm sure are going to be used for some purposes rather than, that, yeah, they're going to watch what you're doing. They're going to want to monitor everything that you're, every purchase, every cup of coffee. They're definitely going to want to, look into everything. And if you buy the wrong thing, you're hanging out in the wrong neighborhood, I'm sure we will see, some backlash from that, whether it's a social credit score or whatever. But Mac, this is something that a U.S. policymaker has to be concerned about, right? You see China, they're rolling out all this hardware, they're rolling out the infrastructure. Should that make the policymakers more bullish on, Bitcoin and getting the regulation down and opening up, whether it's businesses or, overseas or in-house to try to develop the space? What should the policymakers do when they see something like that happening over in China?
I think what they should be doing is taking note and learning and looking at it as a use case and a sample for what to do, what not to do. I think a lot of what is going to be done over there is exploratory, same way El Salvador adopting Bitcoin as a legal tender. They're basically a trial for the rest of the globe. So I think anybody else that plans on rolling out a digital currency has to actively take note of what's going on over there. Now, it is important to note, I think Ben and Keeper mentioned it, right? So it's the tracked. They want a currency that can be tracked. Everything, everywhere, you'll be able to track. If you don't want geolocation for where you're actually sending payment, well, if you're using a processor that actually sends your digital yuan from one person to another, and there's an IP address associated with that actual processing, now all of a sudden they know exactly where you paid, when you paid it, and who the money was sent to. And you're slowly phasing out cash. As much as I, and as much as probably a lot of people on this panel hate cash, cash still has the potential for some privacy. Like, the beauty of crypto is that it's all on chain, but that's also the problem with it, in a sense that if there is a digital currency that the government operates, you can see every single transaction. And it's concerning for people in China, but I think that's kind of makes sense that they're moving towards this really monitoring everything that they're going on. So I think from a US side, and as like a citizen, right, it probably doesn't affect your day-to-day too much, just because you're using a lot of digital dollars. But it kind of concerns me just from the privacy and the security standpoint, that they'll literally know every single time you brush your teeth and you pay for a cup of coffee.
Yeah, I want to go back to what you said about the government. We can track what they're doing now. Gareth, you're probably a little more familiar with a quantitative easing policy or Fed tightening policy and the effects that can have, on the markets. Is that a concern of these policymakers that when they do something like a quantitative tightening, which they're calling something else now, but when the spigot does run dry and you can kind of see them, no more injections of liquidity into the markets? Do you think that, the quantitative people, the data analysts, that they'll see like the writing on the wall sooner and, we'll have quicker crashes and quicker corrections? Is that a concern of theirs?
Yeah, no doubt. And just to go back to the other point, you guys were talking about China and the authoritarian regime. What's amazing, I was reading an article about what China is starting to roll out, and it's just in its infancy right now. But basically, they have what's called a social score. So if you smoke too much or if you play too many video games, your social score gets hit, and that'll ultimately affect you, like your credit score, right? So you'll have harder time getting a loan. You might not get as good of a job. It might show up on a resume. So it's really kind of freaky what's going on here based on what the government deems to be appropriate behavior, and then how they can track all of this to basically monitor and then penalize you if you're not right up to whatever they think is the proper way to behave. So, I mean, that's just a whole nother situation. But going back to the quantitative easing side, you're 100% right that as the Fed tapers, we're already seeing the volatility in the market skyrocket just in the last month, really, since tapering's been announced. And it's going to create an issue where the Fed, in my opinion, is at some point going to have to stop tapering and restart the stimulus, because the market is addicted to it. It's like a drug dealer giving drugs. The market just wanted the drugs. The Fed has supplied it. And as soon as they start taking it away, you're going to see that convulsion in the market go on.
Yeah, in 2008, we're looking at almost 15 years. So, this is not an easy addiction to break at this point. We're not talking about 15 months. We're talking about 15 years. So, yeah, this is the genie's out of the bottle at this point. But let's go to the lightning round real quick. I switched it up just a tad, but it's going to be a good one. I'm interested to see. I think I know how everyone's going to answer. Would you use free digital yuan to buy your Pepsi or Coke in Beijing, or would you use your own credit card on their payment network? What would you rather use? Mac and Cheesy, I'm going to start with you.
Free? I get to buy it for free?
Yeah.
I mean, with that,
all right,
with that
you're
caveat,
using the digital
I will
yuan.
use it for free.
Okay,
I'll use
okay.
it for free if I get a Pepsi or Coke. But if it was all else, if it wasn't free, I'm using the credit card. I'm getting the points.
Getting the points. All right, so you're doing it for the points. Okay, I see. Gareth, would you use their free digital wand, or would you want to swipe your own credit card on their financial system?
I mean, considering it's all probably tracked, I'd go with the free. Free is for me. Can't go wrong with that. Now, if I was doing something else that maybe wasn't as kosher, then maybe try to slip in some cash. Go with the third option.
Yeah, I'm sure they're watching the credit cards, just like you see Jason Bourne, like, oh, he just got a hotel room across. So, Crypto Keeper, which one are you using? Are you using the free digital wand, or are you using your own credit card?
I'll be honest with you, people might not like this answer, but I'm gonna go ahead and opt out of China. I'm just not gonna go.
You're just not gonna. Yeah, man, guy, you cost us the gold medal. I hope you're happy. Ben Armstrong, which one are you using, digital wand or your own credit card?
Yeah, unlike the Uyghur Muslims there, I'm going to have the option to opt out.
I will answer just to change gears there for a second. I would use the digital wand. I would just want to see the block confirmation. How quick is it? Is it anything like a credit card machine where it says, look at me, keep the card in there, eye contact, keep it in there, and then it screams at you and throws a pot and pan at your head, saying, get it out, get it out. So I would see, does it attack me like the, American credit card machines do? But let's talk a little Bitcoin price action today. We were bouncing. Boy, was it scary when we were touching 39. I know I was feeling, it wasn't a great feeling. I'm sure some of the guests here were also feeling the same way, but, J Chains, good note from J Chains. J Chains said, we're feeling like stock market bros because the Bitcoin went up 3%. So we're all excited about this, 3% gain. But even with this abrupt surge, we jumped up to 42, almost touched 43, actually. Some traders are warning that altcoin pain is going to be hitting and is going to be hitting hard. Crypto Keeper, is that a narrative you're seeing, or are you starting to get bullish on altcoins and saying this is an accumulation phase?
Oh man, I literally have never been more unsure of what this market is doing. I will tell you, the one thing that I saw that I felt good about was when we wicked down to 39.6, it was almost immediate. I was on the phone with my business partner, Blockchain Crusader, and it literally wicked down and almost immediately got bought up. And I think the great thing about that is it was a large enough wick and it came back up fast enough that I think it was the market saying, you know what, we're not ready to go there right now. Now, I don't know how long that's going to hold off, because the reality is things have been anything but certain and anything but bullish recently. But in the short term, I believe my prediction would be that we're going to head back up towards 50, but breaking 52 and continuing to go right now. Man, as much as I'd love to see it, I just don't right now. I could see some more negative price action.
Okay. Mac, I want to bring this to you. You're always so good at explaining, some of these concepts that we take for granted, perhaps, and maybe it's your TikTok audience. I don't know. But today, the fear and greed index is very, very, scary territory. I kind of covered it yesterday. Lows we haven't seen since July 21st, where, that's where we had our last bounce during the summer. So right now, we're multi-month lows right now, 10 out of 100. Firmly in the extreme fear territory, even after a little price bounce. Please explain to people in the space, what exactly does that mean? Where does this come from? Does this mean sell? Does this mean buy? Does this mean neither? For someone who doesn't know what the heck this little meter thing does, what does it do?
Right. So you see it all the time plastered on a number of social media. You see the dial, the fear versus this greed, frankly, the exact like metrics that are going behind that. I'm not too familiar with, but I will just give like a high level overview, right? So from a fear perspective and from the market standpoint, right? Like, what are people thinking? What's going on right now? And I think from my side, the market as a whole outside of crypto is skeptical, right? So the real estate market, you have interest rates rising, you have the equity market there, which is falling as well. So the market as a whole, I wouldn't say this fear and greed indicator is just an indicator of crypto. I think the entire market's a little spooked for real estate specifically, right? So I primarily do real estate in Southern Florida. We have a close eye on the entire real estate market there. And now we're seeing properties pop up left and right that 3 weeks ago, we would have taken in a second. And now they're happening more and more. And it's almost like something has switched in the real estate market where it's like, okay, Now we're almost trying to get out of it. So I think the fear in the entire market is there. It's not just specific to crypto, and I'm feeling it a little bit myself, right? You see this wick down to 39. Is it going to drop below this, Gareth? I think you said this on last week's show where it was like that's a major, this 42-40 range is a major point of resistance. If we drop below that, where is the next one? Maybe 30, okay, then what happens? So I think broader what's going on, there's a lot of uncertainty in the market as a whole. So it's like, okay, where are you at? What are your positions like? And do you believe in where you're at long term?
Yeah, and speaking of fear, there was a little bright spot of hope. It's not all doom and gloom out there. We had Jerome Powell. He came out and he said, we're likely to remain in a low interest environment for some time. And there's a comment that the stocks and the riskier assets, they definitely seem to appreciate, something like that. Is that kind of what we're seeing right now, Gareth? Was this a Fed comment bounce, or was this more of a TA bounce? And, it's just, back to the Michael Jackson thing, is this just the shoulder twitching, or is this, Jerome came out and saved us all?
Yeah, so it's weird, but weirdly enough, it kind of coincides with itself. And you'll always notice that with technical analysis is that a pivot low will coincide with some good news and so forth right at support. So one of the things to keep an eye on here is if we look at the chart on Bitcoin, and this is such a cool thing, like Mac and Cheesy was saying, we did just hit major support. So take a look at this trend line right here, right? And on that dip, we actually finally officially touched it. And what's cool about this is that 40,000-ish area, when we had that big rollover earlier in the year and we made a low here at 30,000, this was the range, the up and down chop range that the market was in until it finally broke out to the upside. So it makes sense that this would be a very high support level. Now, like Mac and Cheesy said, if it breaks, that's where you have trouble, right? Then you have 30,000 as your next support. There's not a whole lot in between there. So at least in the short term, I think that's the key is just watch this 40,000 level. I did for a short-term swing trade. And again, I'm a trader for the most part. So I did go long Bitcoin right in this range for a bounce back to, I'm thinking 46, 47, maybe 48,000, but it certainly isn't my buy where I'm thinking it's going back to 65,000 or anything like that. So it's just a short-term trade, but I do like it here. And I think we hit major support.
All right, I want to ask you why I have you on the horn, and we're talking about, if it does go below 40, I'm kind of on the record for saying I think the buying pressure at 29, 28.5, we saw it during the summer. I think that it will stick there. However, yesterday we had a guest say 11,000. We had another guest say 13,000. If we can't hold 40, is that a number that's kind of in play to you?
Yeah, it is, unfortunately, right? And that's kind of the worst case of all scenarios where, you have all this leverage that honestly, you have to look to the Fed. The Fed is to blame. They juiced this market since 2009 with just unlimited amounts of money. Their balance sheet's now like 9 trillion. We know what quantitative easing has done. And now you've seen the inflation and now they're having to start to pull back on it. So the idea is if it's going to go down there, you're going to see this massive deleveraging event where there's been so much leverage in the stock market, in the housing market, in crypto. If that were to fully unwind and you really flush people out, it definitely has a chance to go down there. But I would be if we get that lucky, I think I would be a huge buyer down there.
I would definitely be a huge buyer. Hernandez in chat saying winter is coming. That's it's after winter, spring. Speaking of juicing the market, last on this subject, Goldman Sachs was recently, they're doubling down on their 100K Bitcoin if it can acquire a decent market share from gold. Ben, what does it need to do to compete with gold that it hasn't already done? Is this point, is it almost like a marketing move?
Bitcoin is not an entity, so like Bitcoin can't compete with gold. Gold is a metal. Gold can't compete with anyone either. There's no actual competition between the two things. The idea is actually like what are the investors? Like what do investors think offers the better scenario? And at this point, there's literally nothing Bitcoin can do. It's just a matter of time and patience. If you would have told people back in 2010 that here's this thing Bitcoin and given all, like, think about this. If you were to go back to 2010 and you were to have a conversation with a gold investor, all of the information that you would be giving it about Bitcoin, it hasn't changed that much in 10 years. Okay. Yes, the numbers are bigger, the network is bigger, but all of the fundamentals that made up Bitcoin at that time, they still exist today. So, now the only reason why people came over on the Bitcoin side of the argument is not because of the fundamentals of Bitcoin. It's because of the time and the, amount of, confidence that people have in this asset because of the time factor. So when you look through like what the general 4-year cycles of Bitcoin look like, confidence is very high in Bitcoin when the market is up, and then it's extremely low when the market is down. I think until we see the volatility kind of move out of Bitcoin to where it's not so dramatic and we're getting these gigantic price swings, your traditional gold investor is not going to want to move over to Bitcoin.
Yeah, I mean, like you said, it's doing the same thing it did 10 years ago. So, like, what is really new besides, just the growth of the network? But let's talk about growing. Let's talk about growing some generational wealth here. That's right. 10 years ago, if you would have asked someone, what is a good investment, since Ben's, you go to a gold trader, you go to anybody, they're going to say S&P 500, bonds, private equity, hedge funds, real estate, maybe precious metals. Peter Schiff, you got a long road ahead of you. If I was in a time machine talking to you 10 years ago, God, it's going to be a long road ahead of you. But, these are the things that, people would traditionally say 10 years ago. Then we had a recent survey where they asked millennials, where do you invest your money? 25% of them have a portfolio invested in cryptocurrency. So the younger people are slowly starting to transition, whether it's because real estate is out of reach maybe, or maybe it's just they don't really trust the legacy system when it comes to hedge fund managers and as such. Mac and Cheesy, what is it about crypto that's really attracting people? Is it attracting people because of the tech, or are they just, not attracted to the other stuff?
I think it's a combination of both. And I think this kind of stems back to a couple of weeks ago, we had Jack Dorsey going on like a little Twitter rant attacking Web3, saying that the majority of people that are in Web3 are really just VC investors. But I think there's a big distinction why people like Web3 and crypto versus that of previous like Web2 or Web1. And that's the fact of ownership. So in this scenario, anybody in the world can get ownership in these projects, in these products, in these companies that was traditionally reserved for founders, developers, and VC funders in Web 2.0 boom, in the dot-com boom. Like that was reserved for them. So what younger people they see as an opportunity to get ownership into things, and not to mention the quick price appreciation. Like they're looking at all these things, they're on TikTok, they're scrolling, they see people talking about these 100x's, these 10x's, and although a lot of that isn't really very truthful to a lot of the viewers, it is true in a sense that that is the type of appreciation that's going on in this market. So they see this, they see it as an opportunity, and you can't buy real estate. The idea of having the white picket fence and buying a home with inflation, that is borderline a pipe dream. Like that just can't happen for the majority of the Americans who are trying to grow wealth. And as they're saving money, their money's also depreciating in value quicker than you can even imagine. So I think a combination of having the ability to own in something that you do, they're on technology more than really anybody. So it's like, okay, they're part of this ecosystem. They know it better than anybody else. They have a competitive advantage there. And the alternatives are getting less and less realistic.
Yeah, and speaking of realistic and unrealistic, I think a younger investor is going to have slightly more exposure to Binance Smart Chain style pump and dumps, whether it's meme tokens or things you saw in a trading group on Telegram, or influencer with 10 followers saying, "Hey, I just made 10x, and you're going to next." So I think it's fair to say that the younger people they see more scammier cryptos. But Ben, to a young person, what do you think is more scammy? A traditional bank or cryptocurrency?
I would definitely say, I mean, you're looking at two different things. You're looking at the perception and what's real, because the perception from them is definitely cryptocurrency is scammier. I know we live in this echo chamber where we think all young people have crypto, but they don't. I talked to a lot of people who, are vehemently against crypto and do believe it's a giant Ponzi scheme. And, all it takes is, look, let's talk about like when people are young, Okay, all it takes sometimes is one person telling them something, and they take that information and take it as truth. So if they got one friend who lost a bunch of money in crypto, they told them about it. Now all of a sudden, crypto is a scam to that person. They haven't done their research yet. There are a lot of young people who have their minds awoke, and they're not woke, but they have their minds awoke about crypto. And they do understand that we are moving to a digital world, but that is certainly not all young people. Banks are the scam. And to really begin to understand that is not a simple task. It's not just listening to one person say it. It takes a big process. Like for me, it was a long process to really discover how scammy banks are and how much in our pockets they are all the time. And they're stealing our money, and then they're using it to, fund other stuff. And then of course they're involved in all kinds of scams themselves. And money laundering. And then when they get caught money laundering, they get a slap on the wrist. While if a person gets caught money laundering, they go to prison. It really is just a slime ball world out there when it comes to the banks. But I just don't want us to get in this world where we fool ourselves and think all young people, believe crypto is the future, because they don't.
Yeah, no, definitely. I see that coming with my trading card background. We're boiling oceans and burning rainforests, even if it's a proof of stake blockchain. So it's always funny wading into those waters and getting out of your echo chamber, like you said. Now, Crypto Keeper, with these younger people, are they just attracted to say the NFT and the super high APY DeFi, or is there room to onboard these people into something like a Bitcoin, Ethereum, Cardano, BNB? Does it have to be flashy for these younger people for us to get that mass adoption?
I don't think that it has to be flashy. I will say we live in a world of instant gratification, especially the younger generation. It used to be you could have an argument with somebody and I heard a comedian say this the other day, you basically win the argument by telling a lie, or you verify it by saying, I swear to God, right? Now you immediately have the answer to just about everything at your fingertips. Now, I do, however, believe we in our Debate Crypto Academy, we're all about educating people, right? And so I think it's all about how you educate people. And I think you can do this with young people as well, because the reality is if you show Bitcoin as being, hey, listen, this is a long-term store of value that ultimately short-term can also have some great upside as well. We use Bitcoin as an example. But then explain to them that there's a hard cap of 21 million, right? Whereas with the dollar that everybody's talking about, oh, I'm going to save money or do this or do that, it's unlimited, it's inflationary. And so that limit gives Bitcoin that inherent value, right? And so then you start to explain to them also, if you want to take away some of the centralization, a lot of these blockchains and networks are decentralized. So there's no third party intermediary. And this is where I think it gets really good, because essentially you can have control over your own finances. There's no bank tracking what you're spending, where you're spending it, or charging you additional fees. And then the great part then goes from there, where it spills over into lending and borrowing, right? The interest rates in crypto are significantly higher in crypto, because we don't have that intermediary that's hurting you on the back end, and the borrowers can ultimately borrow as long as they have collateral. I mean, in the real world, they discriminate against people, right? I don't care whether it's their financial situation, their background, their credit score, whatever, but Bitcoin and other cryptocurrencies are unbiased, right? And I think that's super important. So the generational wealth, if you sit down and really explain it to somebody, I promise I'm wrapping it up. A lot of people get turned off by the market volatility, right? The younger generation, that's not going to be quite as much. So we talk about that volatility as being opportunity, and it can become opportunity if you do things like DCA into solid projects, right? You have massive passive income opportunities that are there for you to take advantage of, like staking, yield farming, liquidity providing, right? But all of those things have to do with your risk tolerance. And so you're talking about a younger generation who ultimately has the ability to be riskier by nature, because they have a lot more time to make it up, and crypto's the new hip cool thing to do. So yeah, I think that generational wealth can be accumulated by talking about Bitcoin, Ethereum, and other things. But I think that it needs to have the education on the front end needs to be, hey, look, we've got a whole bunch of different ways to do this if you can look at basically your risk profile. So yeah, I think that it definitely can.
Yeah, I think it's fair to say all five of us partaked in more risky behavior when we were younger. Final question here, and I'm going to kind of joke about, the perfect amount here, but Gareth, for someone who's, looking to have some exposure to crypto that's younger, and let's just assume they have a high risk profile, what percentage of crypto should make up, their portfolio? And of course, I'm assuming you'll mean 100% meme coins, right? I believe that's going to be your answer. 100% meme coins. That's where the gains are, right?
Yeah, right. Exactly. No, I think that if you're young enough, especially if you can dollar cost average over a long period of time, there's nothing wrong with starting to accumulate, even Bitcoin at these levels if you have that long-term horizon, 20, 30 years till retirement. So I think, yeah, I think you can even consider, 40% of a good quality portfolio, maybe spread around maybe the top 10 coins out there. But again, certainly just be ready for that volatility and learn from learn from the history of cryptocurrency, right? I mean, just in 2017, we saw a massive drop from the high. So that can happen again, and you got to be ready to roll with it.
All right. I like that. I like that. And that is all we have time for. I actually had a point snafu. I was trying to give crypto. You know what it was? I was hitting the buttons with no hands. I was trying to do like Waka Flocka, do it with no hands. But no, it did not work. But Crypto Keeper is actually our real winner for the day. So Crypto Keeper. It was a rug pull. It was a rug pull.
I wanted my first road win.
You got rugged, Ben. They rugged you on your own show. You know what? Here, I'm gonna do 15 seconds, and then Ben's gonna get 15 seconds because he's so gracious to have me on the show. Go ahead, Ben. Get your 15 seconds. Let's hear it.
Okay.
No.
Listen. Here's the thing. Georgia Bulldogs, 41 years since we won the national championship. I was not even alive. That's how long ago that was. Just want to say congrats to the University of Georgia. And you know what? The Bulldogs held out for that championship, and we got it the same way that 100K Bitcoin is going to come one day.
Heck yeah. Heck yeah. Thank you guys for having me on the show. Guys, listen, all the information is down below. Make sure that you follow everybody on the panel. There's a reason they're on the panel. And if you're looking to get involved, more and more educated, we've got Debate Crypto over on YouTube, and we've got Debate Crypto Academy where we're giving away a year of market cipher. So come check us out.
All right, and let's hope it's not 41 years. Let's hope it's 14. That'd be 2022. I'm bullish. That's all we got time for. Later on, Biz Squad. DZ out.